Hey guys, my name is Mike Munzing with Munzing Mortgage Group. I caught a video this week. I posted it up on my Facebook page if you saw that. It came from Brian and Frank, our friends over at the National Real Estate Post. Wait till you see this. I know all of us for decades have worked so hard to never be prejudiced about anybody we lend to. Watch what's going on. Doesn't matter politically which side of the aisle you're on. I would go after anybody for saying this. Watch this video.
Anyways, we'd like to expand on why it struck a nerve within the mortgage and real estate industry. So let's cue up the clip.
I actually purchased a home 6 months ago, and I can relate because the amount of hoops that I had to jump as a 24-year-old Hispanic were just unprecedented. So Thank you for that.
And I'm telling you, if you were not a Hispanic, you would not have had as many hoops. That has to end.
Okay, so that's wrong. It's simply wrong. There's not a lender in the world that creates additional conditions based on someone's race.
And why that gets under the skin of lenders is, well, quite possibly the leading candidate to become the next president of the United States accused the entire industry of essentially being racist. If she believes it or is simply pandering is beside the point.
The point is, that's the prevailing message that we hear out of Washington. Not just that lending is discriminatory in nature, but knowingly and purposefully. The truth is, that guy who had to jump through those hoops is correct, but his diagnosis is absolutely wrong.
I will go after that kind of discrimination and bigotry with everything I've got.
Because if you believe that corruption and bigotry is at the core of lending, as Ms. Clinton suggests, then of course you have to do something about it. That being fix it. Weed out the bigots and weed out the crooks.
With everything I've got.
And you do that with enforcement and policy. Again, enforcement and policy that's built upon a lie. Lenders are not creating additional roadblocks in the approval process for minorities.
So you see how this is cyclical in nature. So a lie creates new policy. New policy creates more conditions. More conditions creates the illusion that lenders are purposefully making lending difficult, and the reason they're doing it is because of bigotry towards minorities, which takes you right back to the very beginning.
And I'm telling you, if you were not a Hispanic, you would not have had as many hoops. That has to end.
You see, it's a self-perpetuating circling of the drain, because the more roadblocks via new policy just gives ammunition for some politicians to continue their narrative that lenders are bigots.
I will go after that kind of discrimination and bigotry with everything I've got.
Now, how is this helpful? I mean, I find myself constantly saying this, but think about it.
If lenders were purposefully bigoted, wouldn't that manifest itself in the form of inferior loans with higher interest rates and higher margins to the mortgage company? Now that makes some sort of sense. I mean, like, I don't like you, therefore I'm going to take you for everything I can. That's what the CFPB has accused Toyota and Ally Auto Lending of doing, falsely by the way, but built upon this very scenario I've laid out before you.
I will go after that kind of discrimination and bigotry with everything I've got.
But no, lenders aren't accused of doing that because rates and prices and fees are fixed in mortgage lending right now. The accusation is that lenders are making it more difficult for minorities to get loans, as Miss Clinton would make you believe. Ask yourself, what purpose would that serve? Even if a lender was a bigot, what purpose would it serve them to continue down the road of a mortgage longer than it need to be, or possibly to make it so difficult that the borrower walks away in frustration?
I will go after that kind of discrimination and bigotry with everything I've got.
The answer is, it doesn't. Why would somebody, regardless of their belief, because even bigots need to pay their bills, and if they're wasting their time on sabotaging loans of minorities, they'd find themselves out of a job and on the streets because it would not be tolerated.
So you can see how totally absurd this notion is, yet this is in fact what was just proposed by the leading candidate to become our next president, and it needs to be acknowledged for what it is. Quite simply, a harmful lie that further divides folks in this country down ethnic and class lines.
And finally, a very big acknowledgement here. This video is not an endorsement or indictment of any candidate of either party. Frankly, any candidate that spouts this type of crap about the real estate and mortgage community would receive the same treatment from us. This video is about the mortgage industry, not the political environment.
And I'm telling you, if you were not a Hispanic, you would not have had as many hoops. That has to end.
Unbelievable. A presidential candidate saying that our industry is bigoted and racist. I am offended. That is not good. On a positive note, let's take a look at Property Radar's report for January. Looking back at that, what do they say here? They do mention that 2016 real estate market may be likely to benefit from the global market turmoil, whole bunch of stuff going on in the world. That should be improved. And by the way, you can get that over at propertyradar.com. It's a great report. It used to be Foreclosure Radar, very helpful. It also says that 1 in 5 transactions are all cash and that the foreclosure notices are near the lowest levels since 2007. She goes on to say that January home sales were up about 3.9%. Now, we're going to look at that. I got a little issue with that shortly. She also mentions that despite the slowdown in many national economic indicators, California single-family homes and condominiums have picked up once again, January 2016, and the extreme volatility in the equity markets has precipitated considerable outflows of cash, some of which may be finding its way to the California real estate market. Very interesting. Let's look at some of these charts, though. This is where I have an issue. So let's take a look at the charts and see what they have to say. The first chart that I show you is the home sales, and that is month over month. When she's talking about an increase in sales, that's year over year. From December to January, all properties are down 29.8%. And resales, the ones that are non-distressed, are down 30.6%. That's month over month. That's immediate right now. So when you say sales have increased, she's looking year over year, which is a little bit deceptive. Next is the year over year we're talking about. Here is where they've increased by 3.9% over all properties over all of California. But the non-distressed properties are at 9.4% up. So it's interesting. Once again, distressed, that's down 18.4% year over year, which is why we don't talk too much about distress because the foreclosures are at such a low level. Next is the California homeowner equity chart. Interesting, that also has been going down and down and down. We're at 6.4% of all homeowners in California are underwater. That equates to about 560,000 homes. As you mentioned, the all cash sales, the ones that don't need me as the lender, and those are month over month down 25.2%. That's all part of the fact that the total sales are down. All cash sales are down as well, but year over year, that is down 9.3%. And now we're on to the foreclosure charts here. This is the different aspects of foreclosure. Remember, you've got the notice of default, the notice of trustee sale, and then the actual sale of the property. So the month over month from last month, from December to January, they are up just 1.7% as far as the notice of defaults, but year over year, it's down 14%. Notice of trustee sales, that next step where they let you know when it's going to sell, month over month is down 9.1%, but down 11.4% year over year. And finally, the actual sale of the homes, that is up 9.5% month over month, but down 18.8% year over year. So you see the big differences there. And finally, are the inventories for foreclosures, and those are, I'm just going to look at the year over year. The month over month are very stable because they don't trend very quickly, but year over year is that bigger trend that we want to look at. So the pre-foreclosure properties are down 19%. The scheduled for sale properties are down 5.4% for the whole state. And finally, the bank-owned REO inventory is down 12.9%. A slowing part of the market, to be sure. So let's get out there and focus on our sellers who have equity, which is a much bigger number than it was a few years ago. Hey, the overall inventory is the problem. We need more properties on the market. We need to get more inventory. So get out there and get those folks to sell their properties. The values, though they were talking about being level for the year, I'm definitely feeling an upward trend. We just got to get those appraisals to come in as well. I'll be out working this weekend. It's going to be beautiful. You can reach me at 949-689-5626. I've been lending out here for nearly 30 years. Put me on your list. Make me part of your team. I can get those approvals quickly. I've got my online application. I've been doing this forever, all aspects. I know what'll work. I know what's going to be a little outside the guidelines. So let's control these buyers' expectations. Let's get them into those properties. I really, really look forward to working with you and your buyers and your team as well. So God bless you. God bless your family. God bless this beautiful country. It's going to be a great weekend. Call me and we'll talk soon. Bye-bye.
Money, 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 money.